Lovely, right. Good afternoon. Good afternoon. That's a great start, isn't it? Good morning. Certainly good morning. Welcome to today's 7:30 webinar, Thursday, the 13th of June. Ali on the mic. Hope you're well. Hope you had a good week so far. There's some sunshine back in London this morning, which is very pleasant. It's been a while since we've seen anything other than rain, it seems. But some sunshine is back, so that's good. Hope it's weather's nice wherever you are. Right, as promised this morning, we're going to have a walk through market profiles and volume profiles, in particular, sort of my day-to-day process. Now, those of you which are in week 6, week 5 always comes and hits pretty hard. It's a very different means of analysis. It's a very different approach to some of the more conventional support resistance trends, trend lines, channels, and so on and so forth, which you'd have covered in the first 4 weeks. And very often week 5 can come and go, and you're sort of struggling at the end of it to make sense of, well, what should I actually be doing with this? We've had a few people email in with trade plans where they're trying to use profiles but are lacking any real clarity on how they're going to use them outside of just saying, I'm using volume and market profile. Now, it's not quite as simple as that. Volume and market profiles, relatively complex topic, quite a lot of moving parts, quite a lot of variable signals from it, and it's quite important to have a clear, defined, step-by-step process to try and come to a conclusion. And part of your trade plan may well need to be, if you're using profiles, a checklist, whether it's the one I'm going to go through now or something similar to, or a completely different version of it. It doesn't really matter. You need to be quite clear on exactly what are you looking for, and how much significance are you giving to these profiles. Okay, so I'm just going to walk through mine. Now, I've removed a few of the checks that I do because they're not hugely relevant to this topic right now, profiles and market profiles and volume profiles, but I've left in here everything that is related to profiles. Okay, and I thought we'd have a look back through, and we'll have a look through the S&P 500. It's an example from a few days ago. This is the 3rd of June, Monday the 3rd is the profiles we're going to analyze. So this is then looking at how could we have executed a trade on the Tuesday the 4th. So what's that make? It's about a week ago, something like that. Okay. Oh yes, please, mate. Thank you. So I'm going to, the first 2 checks for me, like I've said in the past, the only way I will take a trade is if I have a clear catalyst. Now that catalyst is either data driven, so yesterday inflation prints, for instance, or the Fed last night on a more comments basis, or if I've got a headline, a clear catalyst and a reason for something to want to move. Okay, never forget the fact that fundamentals are the reason why a market will move. Technicals are how the price gets from point A to point B. Okay, more often than not, the bigger moves in the market are taking place because there has been some sort of fundamental catalyst. Okay, so it's really important to recognize fundamentals and macros. Now, of course, these 2 here at the top of the list, they have nothing to do with the profiles. That's just, have you got a reason to want to be either long or short, for instance. Okay, now, with that in mind, okay, those 2 are going to come out of the equation for the time being, so I want to focus purely on the profiles. So first question to ask, market profile and volume profile shape both daily and weekly. Okay, now you can look at both shapes, both the volume profile and the market profile. They will look very similar. Okay, in particular, if you are using TradingView's TPOs, the volume profile will nearly always be an exact replica of the market profile. Now, the reason being for that, the volume profile, you're not paying for data. Okay, typically, volume profiling and market profiling came about from those which were trading futures markets. Futures markets, you can gain access to the number of contracts that are being traded on any given day and the exact volume that's being traded every single day. Within TradingView, unless you're paying for that piece of information, they are just basically replicating any volume that's trading through the broker, which isn't necessarily a true reflection of all of the volume being traded in the market. So naturally what then ends up happening is the volume profile ends up looking very much the same as the market profile. Okay, now that's okay, you can still use it, but it probably has less significance than perhaps the market profile, which you know is based on time and therefore can be trusted. Okay, the volume profile a little less reliable on TradingView, the market profile 100% accurate, so no no issues using that. So with that in mind, I would probably rather take the shape from the market profile than the volume profile. Okay, I've put both here, but they're both going to look very similar anyway. All right, so what have we got here? Okay, ultimately we have got a P-shape formation. Now, the first check that we're doing here is just looking back at the previous day. Okay, I'm not looking back at any other historical data. I'm just looking back at the previous day, and in this instance, it is a P-shape. And now a P-shape is suggesting that we are accepting and spending significant time at higher prices. Yeah, we didn't like trading down at the lows. That implies if we didn't spend much time down there, it implies there was quite aggressive buying, driving the price to the highs. And then as we spent time at the highs, that implies there's not really anybody sat up here trying to drive the price lower. Okay, we are accepting these higher prices. We're spending a significant amount of time up here, which tells us that either buyers have got the price pinned to the ceiling, and there's generally a reluctance from sellers to drive the price back down. So we are happy trading at higher prices, which is therefore a positive thing. The market profile is the black boxes here, the left-hand side. The volume profile is the right-hand side. Okay. So that P shape suggests positivity, that suggests buying pressure, that implies we're accepting higher prices and therefore we're likely to continue going to explore some higher prices. Okay, now I've given my checklist in here just numerical values. I've just put a 1 if it's a buy signal, I put -1 if it's a sell signal, and I put a 0 if it's kind of neutral, it's not giving me anything. Okay, so for this instance here, on the daily profile at least, we have got a buy signal. Now, what I'm asking to check the daily and the weekly. Okay, when I change the weekly, I'm just going to need to increase the block size to 4 hour. There we go. Okay, so I'm just looking, this is the current week that I'm trading now on the, did we say the 4th of June, I think it was. So I'm looking at the previous week in here and I'm looking to see, is there any shape or any significance? And in here, we have got nothing. Okay, it's not a P shape. It's a little bit thin in terms of its shape. There's no clear agreed price, but we're trading right in the middle of that profile. Okay, so nothing there coming from the weekly. That's absolutely fine. You don't need to see it on both. It's just doing your due diligence to make sure you haven't missed anything. Okay, so the daily is giving me a signal to go long. The weekly was neutral. There was no signal at all, and therefore this remains as a long bias. The next check down is to check previous profile shapes, not just yesterday, but to tell the story of how we got to where we are. Okay, now I'm looking back over the past 3, 4, 5 days. Like I said, I'm trying to paint a picture, right? What has happened previously, which also supports this argument for going long? Now, the first thing that I can see is this balanced day here. I've got a lovely D shape. Okay, you can see that even distribution of time and volume over a very narrow range. Now, that D shape is quite often accumulation or distribution of positioning. Okay, you don't know if it's people accumulating positions to go long or to go short, but the confirmation of that comes with what then happens next. All you know is that during days like this, more often than not, you've got relatively large institutional participants building volume and building into big trades. Okay, it can quite often be the precursor for quite a significant move. Okay, if you see a D shape, very often following on from that, you can get longer term trends. Now, the following day, we tried to break out of the downside to the bottom and also to the top. Okay, we tried breaking both ways. Now, thank you, mate. We failed to hold above. We spent very little time. We also spent very little time below. And what's interesting here is the bulk of the time and the volume was actually back within inside the range. So it sort of suggested that actually we were still relatively happy trading. Sorry, some quick drink. relatively happy trading with inside the high and the low of that balanced day. Okay, so there's a general reluctance to move higher or lower. Now, after that, then you get the more substantial move. You get the aggressive move higher, and then significant amounts of time now trading above that balanced day. Okay, there's above that D shape here. So that's now supporting and suggesting that anyone that was trading in this area where we spent a big chunk of volume and time here and here was very likely positioning into longs, because now as the market's gone up, we are accepting these higher prices. So actually the story into this D-shaped formation could be the start of the building blocks for then a bigger trend to the upside. Okay, so for me in here, this actually is really quite a nice example of just seeing that build and accumulation, the failure to move lower, building volume back inside the previous range, and then getting the confirmation of longs with that bigger, more aggressive, more sustained move above the balanced day. Okay, so looking back over those previous days, that also to me suggests long. The next question is then inside day with a question mark. It's simply asking the question, was the previous day an inside day? Okay, in this instance, it's not. We've got a higher high than the day before that, and a higher low than the day before that. So it's not an inside day. An inside day would be this. I put these two together. This here, okay, the full trading range, the high and the low, are within inside the high and the low of the day before. Okay, it's a sign of indecision, and indecision will typically lead to reversal. So all this is asking, it's just a reminder to myself, just check, was it an inside day? If it wasn't, then there's no signal, nothing to be done. If it was, then do you need to consider the prospects of a reversal in the trend? In this instance, there is no inside day, so we remain neutral. The next question just says last value area, and this is referring to where is the position of the last value area? Where has it gone? You know, has it moved higher? Has it moved lower? Is it overlapping? Is there a clear step change in where is accepted and fair value? Okay, and for that, I'm going to be looking at the two previous value areas. So this one here, the dark purple, and this one here. Okay, now you can see that in this example, not only has the value area gapped higher, moved higher, it has left that gap. Okay, there's clear daylight between both value areas, which is a very positive thing. It's a sign we're accepting higher prices. Not only is it taken out the days before, but also the day before that, and also a big chunk of the day before that. You can see the bulk of the volume and even the point of control is trading above this value area high. So I've got 3 days worth of value which it's taken out and it's now trading above. That is a huge shift in sentiment and a very, very strong indication of positivity coming into the market. We are now accepting higher prices, green light for this market to continue moving higher. So that is also long. Now then, probably my most important check is why I've got it in yellow. Where is the opening price versus the last value area? Now that is the open of the current day. So all of the analysis as we were sat on Tuesday, the 4th of June, was looking back at the 3rd of June and previous. For today, for this check, you're looking at where is the open on the 4th of June. Okay, so you can just see it there. I've got it, it's just popped up here. This is the start of the next day as it starts to develop here. You can see that open is pretty much right in the middle of the value area of the previous day. That is a neutral signal. It's basically saying we were trading in this range from 52.67 to 52.99, call it 5300. Okay, we're trading from 52.70 to 5300. That's where we were happy trading in the day before, and we've opened up within inside that happy place. Yep, the market agreed yesterday that was a good price, that range, and now we're still trading within that range. It doesn't really tell you hugely positive or negative. Unlike the day before, for instance, where you've opened up here above the previous day's value area, which is telling you we are already making aggressive steps and aggressive moves to try and break to new highs. Okay, so opening above the value area is a very positive thing. Opening below the value area, like we did down here, this opened here beneath this value area low here, is a very negative thing. Okay, in this instance, I've opened within, so therefore it is neutral. Now, it's very rare for me, but I would go against that. If the rest of my check sheet here was all green and it said buy, 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 but I opened beneath the value area low, I probably would not, I still wouldn't take it long. I would wait for the price to get back above the value area low before looking to take a trade. Okay, we've then got previous 3 days, poor highs and poor lows. Okay, now I'm looking at multiple days worth here. I'm not looking at just the day before. I'm trying to, again, build a picture of who's in control. So if I start firstly with just yesterday, we have got poor highs. Okay, I've got 4 TPOs sat right at the top of the profile. That's a very, very positive thing for buyers. That's telling us that we came up to these highs, we spent a significant amount of time, there was a lack of willingness to sell this market, buyers are firmly in control. Now the assumption we make with poor highs and lows is that they will go on to be broken. Don't know when, okay, but they are likely to go on to be broken. I've also got poor highs here and poor highs here. Okay, now I'm happy to this middle one, although I've got a single TPO print at the top, that single steps straight into a triple here. I'm quite happy to treat that as a poor high. We also had a poor high here, however, this one is not significant, it's not important anymore because the market has broken up through that poor high. The moment you break above it, then that's been resolved, it's no longer part of your thought process. Okay, if I come back in time for quite a lot, I've also got poor highs here. Now, if I make the assumption that poor highs are going to go on to be broken, it's telling me that here, 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 and here, all 4 of those resistance levels the price should trade through all 4 of them. Why are we calling it a poor high? It's a poor, okay, so it's a poor high because it's referring to basically the strength of that level. Okay, it's right at the top of the profile, which is why it's high, not low, and it's the strength of it. So in order for you to have TPOs, 4 TPOs at the top, that means you've been trading at that high in 4 separate 30-minute windows. So from a price action perspective, this would look like this. Could do something like that. And you would get left with a level where you've spent a lot of time. Now, there's one argument to say, well, that makes it a good resistance level. Okay, however, resistance is created by a willingness to sell. Yeah, a willingness to sell at that level. If the market did that, or in comparison, did that, which is suggesting there are more sellers, the one on the left or the one on the right? Yeah, the one on the right. The one on the right is where the price is getting driven down really aggressively. We came up to the level, and the moment we hit that level, sellers piled into the market and drove the price down with real clear aggression. Yeah, hammered that market lower. That is then a good level, right? That is a good level. We've come up, clear aggressive sellers. Up here, the price has bounced off it. Yeah, fine. It's not going up any higher, but there's nobody here really trying to sell this. It's just grinding away, slowly but surely. If you were a seller here, you would feel relatively deflated and you'd be lacking any real confidence. And therefore, it's quite easy for the market to make its way back up through there. That lack of aggression is suggesting that the sellers are weak. The buyers will see that, almost sense blood and go, okay, well, there's nobody fighting us here. There's no resistance. Let's keep going. Let's try and punch a hole through the ceiling. Okay, so the poor is referring to really, it's a poor level. It's not got any strength to it, and therefore it's likely to be broken. Okay, and here we've got 4 of those levels which are yet to be broken. So that is definitely a signal for long. Now the opposite of poor highs, and I guess they should be called good highs or good lows, that would make more sense, but unfortunately they call it excess, is then the opposite of this. Now if we look at all of the days that I've highlighted here, we have got really strong excess at the bottom. Now excess, of course, is the opposite. That's when you have single prints at the bottom, a minimum of 3 in height. In this instance, I've got 1, 2, 3, 4, 5, and then it goes into doubles, into triples. Okay, if we haven't spent much time at a support level, let's come back up to here, let's just delete this and delete this. A poor low, you would come down and you would spend a lot of time at support, which implies there's not a lot of buying and therefore likely to go and break through. Excess is when you get a really aggressive reaction. So you come up, you come down, and immediately you turn away with real aggression. And that's a good sign of aggressive buying in here. Strong intent, clear aggressive buying, a lack of willingness to spend any time down here. Yeah, it's like putting your hand on the hob of your oven, right? If that hob is turned on and it's hot, what do? You touch that the hot plate, and then immediately you rip your hand away. You go, ah, and you snap away from it because you go, wow, that's hot. It's that sort of thing. This level you've come down, there's huge desire and demand to buy here, so the price rips away from it. That's a good level, right? And that's called excess. You don't spend any time down there. So when the market dipped, we saw really strong buying. We also have a little bit of excess down here. We also have excess here. We also have excess here. We also had excess here. So in the run into this, we saw 1, 2, 3, 4 days where, although the price is driving lower, every time the price has moved lower, we have seen strong buying come in. Yeah, we've seen that aggression within the market. Okay. Now, this is where the check sheet comes into its own, because you could sit there and say, okay, well, hang on though, but if you had poor highs and excess here, well, you should have bought on this day. And you had poor highs and excess here, so you should have bought on this day, and you would have lost 2 or 3 days in a row. But this is where it becomes important, because the excess is just one check. So too are the poor highs. If we looked at the other checks in here, the open versus the value area would have been telling you to sell. The value area has moved lower, so that would have been telling you to sell. The profile shape in here might have been a B shape, so that would have been telling you to sell. So over the weight of the weight of evidence going through these checks, that would then tell you, okay, actually there's indications of buying, but I'm not going to actually buy until you get the rest of everything else line up like we're starting to get here. Okay, but we definitely have excess telling me to buy. Now then this question, where is the current price versus the previous close? Okay, the current price is this little red dotted line. I've hidden the candles, but you can just see the red dotted line. It is below, oh, actually I haven't got yesterday's closing price on, sorry. There we go. Okay, there's yesterday's closing price. It is below the closing price of yesterday, so that is a negative thing. It's a very simple check, and that makes it a sell signal. Okay, very often you'll see if the price is beneath yesterday's close, it can stay bearish. Once it gets above yesterday's close, it can turn bullish. Now, nothing in here is taken into consideration trend, not particularly. It's really important not to forget that. So we have a check in here, which is previous session. Is it making higher highs, higher lows, or lower highs, lower lows? Okay, now if I just clean up all these circles, let's just remove all the drawings. In here, we can see, well, clearly this low is higher than this one. And on top of that, this high is higher than this one. There is a transition to now an uptrend, which is a positive thing, and we should look to be a buyer. That's the same as we saw. I talked about, well, why wouldn't you have bought on these signals down here? Because actually you're making lower highs, lower lows. You're in a downtrend. There's no real desire to want to buy this market just yet. Okay, so we're making higher highs, higher lows, therefore we are long. The last check on here from the profiles perspective is previous caves and low volume nodes. Okay, now we're going to make the assumption that areas of low volume and caves or single print areas such as this are going to go on to be filled. Okay, now this single print area, this low volume area, has been filled in already. The very next day we traded up through it and filled it in. So that's been resolved. So I'm looking at areas through the chart where I've got those single prints and areas that need to be filled. Okay, now looking back historically, there's nothing historic in the background here. If anything, you'd say there is a slight dip in volume here. You can see that cave acted as really strong resistance. However, for me, I always set it based on, are there single prints? There's no single prints in the TPOs in the market profile, therefore not a significant cave. So there's nothing above. Is there anything below? Well, the two previous days are all filled in, So there is no signal coming from being long or being short based on previous caves. Now, having gone through those checks, what I'm left with is a score of 5. Okay, that is absolutely fine. Generally, for me, I'm looking for 3 or more. Depends on how much confirmation you want. 5 is more than sufficient. And gives me, all that's given me, it's not told me when to buy, it's not told me where to buy. It's just told me, Ali, the higher probability setup today is to be long. Okay, if this market starts selling off, be careful. Don't try and suddenly short this. Be looking for opportunities to buy into any setups that you see, any sell-offs that you see. Okay, so I've got a bias here now from the profiles to want to be long. The second half of the sheet is then looking at support and resistance from not only profiles but general support and resistance to then help me, well, how do you go and access and enter this trade? Okay, and I've just got a checklist here in ranking order of what are the most important things. Okay, and we'll just go through those levels, go through some of these levels now. So important things to consider: previous session highs and lows. Now I want multiple confluences here. Okay, it's not sufficient just to have one level. You need multiple things lining up. So if I look at yesterday's low, that lines up perfectly with this big ledge. It's a superb ledge on the profile on the day before, along with the point of control. It's also the closing price of 3 days ago. So I've got the close, the ledge, and the session low. So that's a good support level, potentially a good support level. I've got the session lows down here, okay, worth putting in. Yesterday's session high also looks pretty good actually. It lines up with another ledge in here and a single print, and also this value area low. So that's also pretty good. And then coming back in time, any other session highs? That session high there is fairly close to this ledge. It's not brilliant though. I don't think that's great actually. I'm going to check this session high. Yeah, I'm going to go with that session high because it's the top of the high of the trend. Oh, actually, am I? Let's just look back at. Yeah, no, I'm just going to take that session high there. Okay, cool. So I've got my session highs. Okay, all I'm going to do is just put something in, say, yep, you've done that. Then I've got weekly profile low volume nodes. Okay, so let's come back out and let's just change my profiles to weekly. Okay, so there's the weekly profiles again. I'm just looking at where have we got low volume nodes, and looking up above. This looks pretty good. It's the weekly high, it's also the value area high, and it's also this little dip in volume. So that looks pretty good to me. And then in terms of last week, I've got this dip. See this dip here? It's a perfect V right in the middle of the profile, which is also lining up then with, I just bring that slightly lower, still very close to that V, but I'm also getting this week's low and these single prints. Yeah, so that looks pretty good. The last thing I'm going to do is I'm just going to tweak this weekly profile, just push it slightly higher to get onto this weekly low. Now we had that blue line at the bottom because it lined up with the daily low, profile low, but if I move it just a little bit higher, I get last week's low and the 3 weeks ago low. So I'm just looking for basically, so it's picking a line of best fit, isn't it? You're just trying to find, well, what has got the most touches, what's the most probable level to choose. Okay, so orange are the weeklies, blue are the dailies. Okay, so we've checked those. And then looking at any single prints, untested single prints. Now we haven't actually got any. Okay, these single prints here have all been filled in. We've already plotted this one. There's no other single prints that can be seen. Remember, single prints are in the middle of the profile. How far back would you go looking for previous high lows in intraday? It's a bit of a cop-out answer, Joe, but as far as you need to is the answer. If you're looking up here and there hasn't been a tradable price up here for a week or 2 weeks, and you've got to come all the way back here 2 weeks in time, then so be it. That's fine. Even if you're intraday, you've just got to go back as far as necessary in order to find where are those highs. That could be a month, 3 months, could be a year, potentially. More often than not, if you're intraday, it's going to be relatively recent. But if it isn't recent and you need to go back further, then do it. Do you still do checks on daily profiles when trading 1 to 5 days, or just focus on weekly? Yeah, you just focus on weekly, Matthew. Yeah, if you're not intraday, the daily profiles will be won't really be of any value to you. Yeah, just focus on the weeklies. You might even look at the weeklies and the monthlies, for instance, but predominantly just the weeklies. Okay, then I'm looking for any ledges. Okay, now there are loads of ledges within profiles. Okay, every profile will probably have multiple ledges. I would always suggest choosing the most extreme ledge within that day. So if I'm looking at this day here, the ledge which we chose here, that is the biggest step change within that day. There's arguably other smaller ledges, but they probably pale into insignificance versus those bigger ones. Okay, so we've already plotted this ledge down here. And then the ledges which are here are just slightly beneath the high. So I'll plot that one in there as well. Okay, previous session, low volume areas. Okay, I've put in line with singles. So I've got no single prints within the previous. Ledges are when you get a step change, a big step change between from one price to the other. Okay, so something like this here. We're going to circle it. This here is a ledge where you've got, it kind of comes down and then goes out at a straight right angle. And you've got from one row of 5 TPOs, you've gone into probably 12, 15 TPOs, something like that. That's a ledge, the same as this is here. Okay, they act as support and resistance. For those of you which are in week 1, please don't worry. This is week 5 analysis. So a fair way to go in your studies before we get to this. Okay, previous session value area highs and value area lows. Okay, so previous day value area low is here. It also lines up with single prints. It also lines up actually with a ledge. Oh wow, and this session low and this value area low. So loads lining up there with this one. This is probably, I'm going to change the color of that. I'm going to make that green because I think that's the pick of the levels so far. That looks pretty solid. Value area high we've already marked out because that was the high of the day. And then round numbers. Okay, what have we got from a round numbers perspective? Well, the high of this day was the 5,300. This is the S&P 500. So you typically go in either halves or fulls. What I mean by that is either 5,200, 5,250, 53, 53, 50, 54. If you just went in the hundreds, that would be 5,200, 5,300, 5,400, and so on. So round numbers wise, I've got 5,200, 5,200 down here. Just gonna dot that one out so we know it's a round number. I've got 5,300 is right up at the high here. We've already plotted that, but we'll put it down anyway. And you've got 5,250 in the middle here. There we go. Okay. So we have now done our profiles. Okay, which has told us I'd rather be a buyer today, and I've now got a green light. I've checked all of my support and resistance. All of that is a case of due diligence, isn't it? It's going to be easy to forget to not check one of those if you don't have a list. Okay, certainly for myself, I've got a memory like a sieve. Stuff just comes and goes. I need something visual in front of me to go, Ali, have you checked this? Have you checked this? Have you checked this? Okay, especially when human emotions involved, it's very easy to get carried away and wrapped up in trading, and before you know it, you're taking trades and you've only done half of your analysis. Now, once you've got to this stage, the profiles can come off, the price action can come back in, and then you can drop down into your execution timeframes. Okay, if I drop down into my 5-minute, life now becomes relatively simplistic. I know I want to be a buyer, and I'm looking to be a buyer should the price either come down to one of these support levels and show me evidence that it could go back up, or if it breaks through some of these resistance levels. If I'm anywhere in between these, I shouldn't really be looking to do anything. And I've got no option to sell here. The only thing I'm looking for is to buy. Okay, and then it becomes a matter of waiting. It's a patience game at this point, right? To see where the price goes. I've absolutely no idea, I'll be honest. I haven't seen what happens. So as it approaches the first level, this would be your first sign now to go, okay, this is my first opportunity. Now it's up to you then how much additional confirmation you want to add. Do you want to add Fibonacci's? Do you want to add RSI? Do you want to look at MACD? You know, what else do you want to add to your analysis? Do you want candlesticks? You can add as much as you like. You might just say, right, it's hit the level, that's good enough. Okay, but the important thing here is once you've hit this level, it's now go time. This is when you could be looking for a tradable opportunity. Okay, now the simplest trade, I'm not going to do any other analysis, is to say I'm just going to buy. Stop loss would always be beneath the support level, targeting the next resistance. Right? That would be, with no other confirmation, of a viable trade. Okay, there we go. So first level, failed. Second level, we went straight through it. Okay, this is why it's so important. You know, I'm not using any other confirmation here, but it's why important you need other confirmation, right? Because you've got 1, 2, 3, 4 levels, but you think the price could bounce off of. You have no idea which one it's going to come off of. Yeah, the additional confirmation of RSI or whatever it might be could help with that. Okay, let's just play this through and see what we get. So we're down to, this is the round number, 52.50. Okay, what have we now got? Let's take that one out of the equation. What have we now got from a primary standpoint, which could suggest, yeah, this is the right level. This 52.50 is a good level. Which secondary indicators do you find work well with the profiles? To be honest, I don't use a huge amount of them. I like anything that helps you confirm a level, right? So pivot points I like, Fibonacci I like, moving averages I like. Those 3 indicators all provide additional support and resistance. So if I had a pivot point, for instance, lining up with a 52.50, that would be reinforce this level. Or if I had a moving average lining up with it, that would also reinforce the level. Yeah, I'm looking for stuff that makes support and resistance stronger, and that tends to be pivot points, fibs, or moving averages. Are there any particular assets where profiles work better on personal level? I guess where I find it difficult to choose the actual asset before running this level of deep analysis. Yeah, it's going to depend who you ask, Joe. I mean, I'm a huge bias for commodities. Okay, I mean, the one thing to say, profiles came about from futures trading. Right? It's not spread bet, it's not CFD. It's only just starting to become traded by retail traders because platforms like TradingView have made it accessible. Historically, you'd have to pay £1,000 minimum for a platform, plus then a monthly subscription to gain access to the tools required to do profiling. TradingView has made it accessible to everybody. So profiles came about and were traded by people trading futures. Now, futures markets are therefore indexes, so the S&P 500, the NASDAQ, the Dow, the DAX, European or US, predominantly US. Futures are also very heavily traded in the commodities space, whether that be wheat, gold, copper, natural gas, oil. You know, that's where the dominant trading tool for those assets is futures markets. It's not spread bet or CFD. The lesser futures are traded in currencies. There's not a huge amount of, there are futures currencies traded, but nowhere near the same levels of volume that you have in some of those other asset classes. So I would say the indexes or the commodities are probably the best place to be rather than currencies. but I have got a huge bias in that as well. So I'm conscious as I say that that's also what I trade. So be careful, be careful with that. But yeah, I mean, these originated from futures markets, so naturally it makes sense that they work best in assets which are heavily trading futures. A personal opinion, S&P, oil and gold are the pick. Okay, cool, right. What have we got here then from a primary standpoint? It's not perfect by any means, but it's very similar to, which could suggest this goes up. Yeah, absolutely, Adam. It's almost like a bit of a double bottom, isn't it? It's not quite right because it's marginally. Where's my drawing toolbar gone? Don't know which one. It's marginally higher lows, isn't it? But the principle is the same here. You've failed to make a new low, so you've now got a bias on the day to be a buyer. You're at a round number of 52.50, which is one of the support levels you had chosen. You've got a double bottom, and your entry to go long now is also going to be back above the orange level, which was weekly level. We put our weekly profile levels in orange, I believe. Okay, so that looks like a pretty desirable area to look to get long. We'll see. To trade a double bottom, you would be waiting for the neckline to break, which would be this level here. So a break above that would trigger us into a long here. Okay, we've had the break and a little retest, so this is looking quite good. The trade would have been, sorry, I didn't put it on, but you'd have been long on the breakout, stop beneath the lows, again, targeting back up towards previous highs, looking at something like that. Chopping about a bit. There we go. Again, that trade would have worked out quite nicely. And I noticed it came back to that same entry level, really nicely retested the orange level. That was the weekly profile level that we drew on there. Okay, and then up towards our target. So on the first trade where we got stopped out, it hit the level. We just blindly said, right, well, let's just buy it because it's hit a level. In the second trade we took, it hit a level. It also had a double bottom, and it broke back above previous support. And so it had far more confirmation, giving us a far higher chance of success. We said yesterday about that, get that battle of how much confirmation do you want versus getting in at the best possible price. We took a risk on the first one. We just pulled the trigger trying to get the best price, and we paid the price. Second one, we waited for a bit more confirmation, and we were rewarded for our patience and our confirmation. Okay. Can you add the profile from the previous day, please? Yep, sure. Let's bring that back. So that's the current day, obviously, so ignore that one. So the previous day was this P shape that we were analyzing. So the level that we ultimately came off of was not particularly strong from a daily perspective. It was only picked up on the weekly. We had a single print here, a little ledge here, but nothing on the day before. Pretty insignificant. And then we ran up towards these poor highs and the ledge at the top. Okay, in terms of what happens next. You can see how the price is just glued there. Let's just get rid of those profiles, pinned to that resistance and the highs which we were looking at. Once eventually it punches a hole through the ceiling, stays above, tries to stay above. There we go, continues on its way. So it retests again. So our levels have been pretty good here, right? They've gone on to be retested. We've kept moving higher. A lot of those poor highs that we talked about will now also have gone on to be broken. Okay, we had poor highs here, poor highs here, poor highs here. The last poor high to be taken out is this blue line. We've taken out 3 of the 4 poor highs that we were looking at. That blue line at the top is the last one, and there it goes. Okay, it's been taken out now. How long is that setup valid for? Typically, you'd be looking to trade that in that day. You don't particularly want to be, you don't want to be sat on analysis of this P shape and everything that we've done, and then be trying to trade that on the Monday, that profile, and then trying to trade on the Wednesday. It's still doable, don't get me wrong, you could do that, but the highest probability of success, chance of success, is on that very next day, which is when this trade would have kicked in. This trade would have got you in at 11:30 on the Tuesday and got you out at 7 o'clock at night. So it would have been, what's that, 6 hours? No, that's terrible maths. 8 hours, sorry, something like that. Okay. Yeah, I look for 3 or more. 3 or more, Matthew. Obviously, the more the merrier. Depends, how much confirmation you want. Okay, now, do I think it's realistic to do this level of analysis in this much detail for every single asset every single day? I personally don't. I certainly don't have the powers of concentration to pull that off. It's very time consuming. Is it realistic? Probably not. I think where you want to apply this is you want to find a catalyst, a headline, a piece of data, something which you know is creating movement and could create an opportunity. Okay, so for instance, US assets off the back of inflation prints yesterday, and then go and target specific assets based on those opportunities. Yeah, I think that's where you could find better opportunities. And then you can be a bit more specific and say, okay, well, there's just been a new headline, there's been new data around oil. Perhaps it's worth me going and doing this analysis for oil. Yeah. And then going and looking specifically at that asset. I think if you've got a list of 10 assets, you say, I'm just going to do this every day for all 10 of them. Good luck to you. You're probably going to burn out relatively quickly, I would think. Okay. Right. Anyway, team, we've overcooked this by a fair distance. I'm going to wrap it up there. I hope that's been a useful session. For those of you in week 1, don't stress or concern if you've understood absolutely nothing. It's fine. Content was going to be covered in week 5 of your programs, so you've got a fair way to go just yet. Do you do this analysis in commodities? Yeah, absolutely, Eddie. Yeah. So the bulk of my trading is done in gold and oil, predominantly oil, I would suggest. So yeah, commodities can work well. Can we find that spreadsheet somewhere? Is it your personal one? No, it's my personal one, but you're more than welcome to take a screenshot of it and put it into practice. Okay, lovely. Right, I'm going to call it quits there then, team. Have an excellent day. Enjoy the sunshine. It is going to be, I think it might be Mark on the midday. Are you on, Mark? Are you on midday or 4:15? Yep, Mark on the midday, so he'll catch up with you then. Good luck. Those of you which are on, any of your programs, any queries or questions, make sure you reach out to us, especially those of you on 1 week courses. 1 week courses, there's a lot of information to take in 5 days. If you are struggling, if you have any queries or questions, or you want to know about future courses and what happens next, if you want to continue, make sure you reach out to us. We'll help out wherever we can. Okay, team, bye for now.